Okay. Let's see, getting some things cleared up. And I've still got an echo in my head. Not necessarily in my... Okay, can you still hear me? Okay. All right, got rid of the echo in my head. All right. That's my problem. All right, as we saw today, they took it up. That was good confirmation of a J-hook pattern, but as you saw in the morning comments, kind of needed to have that bullish confirmation to stay up there. That's why when I put in the message that if they start showing weakness, get out of your longs, because that was the last gasp. If they came back down after this type of signal, they were taking it down. So, and that's exactly what they did. Now, what do we have? We have a bearish engulfing signal and a bearish engulfing signal, stochastics rolling over. Becomes quite obvious that the sellers have taken control. Now would suspect the 50-day moving average to become the next target. Same scenario with the NASDAQ. Not a sell signal up here, just a down day, but this was your compelling bearish engulfing signal. Probably won't even have the possibility of holding here at the 50. That if they go through, they're heading down to the 200, which will still be a good fur piece away. But this right here told the message that when they opened it higher and started trading it higher, then all of a sudden started selling it off. That told you exactly what the graphics were indicating, is that the bears were taking control in already a process of a downtrend. Today needed to open higher and trade higher, and we just didn't see it. So with that, let's take a look at what some of the other things are doing. Commodity prices, the crude oil price is still on its way down. Would suspect that they're just getting the oversold area. So I suspect there's probably one more dabble here at the 200 before they can get any type of bounce. Interest rates going back down. This is kind of a good bottoming action on the 10-year notes. Broke this downtrend, gapped up through it. That's why a gap is very important to understand. Piercing signal, gap up, kind of a gap up through this downtrending channel, tells you that downtrending channel is not going to act as resistance. You're going to have a lot more upside. No, this means the bond prices are going up, which means interest rates are going to come back down. Let's see, gold took a bounce back up today. Wouldn't doubt if they don't come back up and test the T-line, but I wouldn't get too heavy, or if you're doing anything with gold, make sure you're flexible enough to make it just a quick trade to the upside. Once it gets up here to the T-line, you will definitely want to see what type of signals they create there. Same scenario with silver, probably just a bounce back up to the T-line, and then have to see what it's going to do from there. The U.S. dollar still moving up nicely. Let's see if we make this chart smaller yet. Yeah, they've breached this level right here. They've breached the 200. Today, even they came back and tested the T-line and came back up, and it looks like they're trading higher tonight. Portends of more upside. Soybeans started getting weak. Again, there's that booster bearish signal. Let me make this bigger again. There's the indecisive trading Evening Star failed to get back up to the resistance level. Right now they're trading up a little bit after hours, but they took it all the way down to the 200s. Stochastics rolling over. Right now I wouldn't know which way to go unless they bring it back down through the after hours trading through this level. Then you should be in a downtrend. But there's this kind of pennant setting up. And wheat, whoops, we probably want to go to WHAK3. Wheat still rolling over, staying, heading down. Again, wave 1, wave 2, into wave 3. Corn. Corn looks like it's trying to do some bottoming action at this level. So you might watch corn. If it comes back up through the T line, good possibility they're going to bring it back up to the top of the channel. And what else have I not done? Let's see, corn, wheat. Oh, I'm short feeder cattle. Oh, that went off into somewhere. Short feeder cattle. Wave 1, wave 2, wave 3 still in action. And this may be wave 1, wave 2, wave 3. Wave 1, wave 2, wave 3 still taking things down further. So that means live cattle. Live cattle, same scenario. Popped it up today. Now this was one of those scary days where had a little bullish signal. They gapped it up. Looked like they were running up, but in a matter of a couple minutes, they brought it right back down below the T line. So again, our basic simple rule is I stayed short as long as they hadn't closed it back up here, and they've started selling it off some. So we're still in this downtrend. This is just one of those scary days that you have to kind of sit through. And copper, looks like it's trying to do some basing action right at the same level that it based out before. All right, I guess that's about it on the commodity side. The dollar, interest rates, I guess was lean hogs. Also in a very strong downtrend. This is why when you see these gap downs, that usually portends or foretells of a very strong downtrend. Oh, okay, we did crude oil. Crude oil is still looking like it's pulling back all the way to the 200. And then natural gas popping up a little bit, but it's still way in the lower I don't know how far we have to go back to see. Yeah, it's still way at the lower end of the trading range down here. Now, it does look like it's getting a little bit of a bounce, which it broke out through this downtrending channel. I just watch it to see if you're long, what it does here at the 200-day moving average. We did soybeans. Kind of caught in this wedge formation. Topping here, this bottoming action here. Wouldn't trade it until it breaks out one way or the other. All right, so today we obviously started seeing the selling after, again, it looked like everything was positive. So this is one of those days where you have to really use your discipline. Not a happy day. But, for example, we recommended OPK this morning and was buying it because it opened positive and started trading positive. But for this pattern to work, we've needed to see it close near the higher end of the trading range or not create a sell signal. So in the later part of the day, as the markets were moving back down, once it came back down through the open, you could pretty well guesstimate what type of signal it was going to create. It's going to have one that has a big shadow to the upside, not creating a very strong signal. And on top of that, you're watching to see that at the same time the Dow's down 150, heading down still heading down. You got to tell yourself, all right, are they going to turn this market around? Are they going to turn this around? If the conclusion is that no, there isn't enough buying coming into this market to turn this around, close out the position. This is just one of those situations where it looked good and then it looked bad, so get right out of it. The whole process of trading is knowing when to get in and when to get out. And sometimes it's the same day that you buy, which I know goes against the ego quite a bit. But if you can get by that, it's much worse to sit into a position where you said, oh, shoot, I should have gotten out. Now what do I do? Versus having your money out and saying, all right, now what do we do from here? Yep, so OPK there was one yesterday. We recommended GASS because it gapped up. Today it was even looking good. But when it came back down through the open, that was time to start getting out. At worst, if it came back down through the previous day's candle or body, that was time to get out. And definitely at the end of the day, with it closing as a bearish engulfing signal, a left-right combo, right at the same level where it's back into the trading range, you just have to evaluate and say, does this look like a good chart? And the market, does it look like I want to be long in this market right now? And so if both of those answers are no, close out the position. And I'm saying this because this was probably one of my biggest problems through the years of closing out a position you just opened because mentally you said, boy, this looks good, it should be going up. It's hard to tell yourself, boy, was I mistaken. It's time to be out. But that's the process. That's the process for analyzing. The market looks like it's turning up, and this one looks like it's turning up. I want to be buying. Same analogy here. It should be breaking out, but if it doesn't, close out the position. There's going to be times when you're buying, and there's going to be times when you buy and you get right back out. The market dictates that you should wait until the end of the day. The market today said not to wait. Correct. It was already down through different levels that would have told you, especially coming down through this level. But first of all, just the fact that it came back down through the open told you this was weakness. There was nothing. This is time to be very sketchy, or very skeptical as far as the bullish force. That was a perfect time to start saying, all right, I need to take a look at the charts. Are they not acting well? What's the worst that's going to happen? As they take it down and then you bring it back up, you can always buy back in. But when things are starting to look bad on a day where they should not be looking bad, we had a bullish day yesterday. This would have been confirmation of this little scoop type pattern. But when this started failing, you're back into the trading range and you were heading in a southerly direction. That was time to say, I better close out some of these positions with the idea you could always buy them back. Now, I did that yesterday. And sometimes you get whipped around a little bit. For example, UNXL. I bought in yesterday. I sold out today as it came back down through the open of the previous day's candle because the market looked bad. But in the last 30 minutes, they took it right back up. So I sold out the whole position here, and I bought back a third of the position here because if you look at this, you don't need to have a relative strength index on your chart to see that this one did another bullish potential signal. If it opens positive, you want to be buying on a day when the market was getting crunched. So that told you there was something going on here that told you that you wanted to still stay in this stock because they were still buying it at the end of the day when they could see the market was down 200 some odd points. Same scenario with ABMD. But this stock had a very strong, or going into the close fairly strong, coming out of a J-hook. That told you something was happening here just on a relative strength basis, that they were still buying the stock or keeping up toward the top end of the trading range today on a market that was off 200 points. So it gives you kind of the visual analysis to tell you when to be out of situations and when to stay into situations. ISIS had been looking good. A little scoop rounding bottom, but it fizzled. Then it looked like it was going to come back up, and then it fizzled again. So even if this acts strong over the next couple of days, you're looking at now something that's moving sideways and didn't have what we expected to have, that breakout of kind of that little rounding bottom. There's a whole different pattern here. And if you look at this chart, even if it did a bullish signal, you'd have to say, is this something that has a lot of force to it, or is there still enough selling pressure here that's not letting it move up to higher ground? And that was pretty much the analysis on a bunch of stocks today. Like I've been holding calls on MDCO. Or rounding bottom, breakout, pull back, typical pullback, gap down right to the T-line, traded back up. Open positive, told us that this was still heading up, but when we started seeing it close off here, or close down here, that tells you there's not buyers in here anymore. Close out the position. CZR. CZR with it selling off near the end of the day after gapping up and knowing that the earnings report was coming out this evening, you've got to say, is this telling me that they are really anxious to, or really, committed to the earnings, or anxious to see the earnings? Apparently not. Close out the position. I want to stress that there are going to be days, depending on where you are in the market trend, that you buy and you know you have to get back out of that trade by the end of the day. Just do it, because you will not remember that trade 3 days from now. I can guarantee you. All you will notice or be concerned about is at the end of the week, the month, the quarter, the year, what your rate of return is. It's not whether you did good on every single trade. It's whether you got out of the bad trades fast, so you kept your money to go on for to go on to another good trade. Let's see. The market dictates if you should wait until the end of the day. The market today said not to wait. Correct. When at 2 o'clock or 3 o'clock, an hour before the market, you could see there was still no buying coming into this market. The closer you got to the end of the day and saw there was still no buying, that told you what was happening. There was not going to be a bounce. There were not any buyers there to bring things back up. So if that's the case, and there's no buyers showing up, that pretty much tells you that the buyers have kind of given up the ghost and the bears are in control. So observe the obvious. When there's no buyers around anymore, start getting rid of your long positions and or start hitting some of the shorts. Usually lower time frames uncover earlier than daily. Do you suggest using it? Yeah, if things started backing off, especially after a big, let's see, we're going to go back to the Dow. Things started moving up nicely, and then your 10-minute chart. Let's see if I can do this without egg on my face. Yeah, when you start seeing this, and then they start trading where they can't get back up above the T-line. They did once, but they came up through the T-line, but failed at the 50, came back right down to the T-line. And notice all the things on a 10-minute chart that you can see on a daily chart. A big down move back below the T-line. Doji back at the T-line, selling off. Coming back up, now they fail right here at the 50-day moving average. Little hammer followed by bearish signal. Now you have a doji sandwich on the 10-minute chart. Tells you have more downside. Tried to move it back up here. Didn't see confirmation where the next 10-minute time frame kept you up above the T-line. It came right back down to the doji. Opened it again, but still failed, and then started selling off. So this was again starting on your last hour of trading. Just told you that the bears are in control. The bulls weren't there. So if I'm thinking, all right, maybe there's going to be a rally, and I keep watching the 10-minute chart, maybe they're going to start to bounce it right here. Well, if I think that's the case, then I go down to my 5-minute chart and say, all right, what's my 5-minute chart doing? Maybe starting to bounce up. They took it up a little bit. Shoot, they brought it right back down. All right, they've got to start moving this back up for my 10-minute chart to confirm. And the 5-minute chart is still telling me there's no buying. I'm coming out of positions. Let's see, the Japanese, when the market changes its mind, and you have all three indexes saying that they're all coming out at the same time, that means they're not shifting funds from one sector to another. They're just coming out of the market. The Japanese rice traders emphasize closing prices. Does the broader market argue against waiting in some cases like today? If you can start, this is why you want to know what the signals will look like so you can kind of anticipate what the signals are looking like. That if I'm trading down here somewhere and there's only an hour left to go and I don't see anything on the 10-minute chart, I'm starting to liquidate because I know that they probably aren't taking it back up. They're back below the previous day's open, which is not where they should be if we're trading in an uptrend. We've already had a booster move and they've sold off, so it's not like they sold off from here. They've started selling off from here, which is a lot more forceful. So I don't need to wait for the end of the day when I can anticipate that if I see the stochastics heading down and my 10-minute chart and my 5-minute chart not showing any bounce, it tells me exactly what they're doing. They're going to keep right on selling. Roger, yes, unfortunately I was out for a little bit part of the day, but this is why we do the analysis now. I try to do the analysis during the day, and that's why you want to read the morning comments carefully. When I put stuff out in the morning comment that says if it starts getting weak, start closing things out, it's not because I'm guessing that they're going to come down and bounce back up. If they started showing weakness after this morning's bullish move and brought it back down through the open, that means we're back into this trading range. We failed to go out. Stochastics are still rolling over. That's why I try to keep everything short, concise, and say, all right, if you start seeing weakness, start closing out long positions. Sam, hold on, and we'll get to the individual ones. Let's see. I'm still kind of. So there was Enoch. Enoch was another one that had a good chart pattern. It opened positive and was trading positive, but when it came back down through the open, that's telling you you've got a big tail to the upside. Something's not pretty on this. Closed out the position. And it's not because the market was selling off. It was time to get out of position. It was because some of these positions were now coming back down through the open. That's exactly where it shouldn't go. Now, this one was still acting pretty strong. But notice where it closed. It closed off 20 cents today. The risk-reward factor would be if this opens weaker, they could be taking this down pretty quick, just on profit taking, back even to the T-line, if the markets show weakness tomorrow. On the other hand, if they open this positive and start trading up, you can always buy it back. So for 20 cents of loss of potential profit now, you're kind of safeguarding yourself from holding on to something that may get slammed real quick to the downside. If this, so I close this one out near the close because what do we have here? We have kind of a hanging man. Very simple. If it opens lower, we're glad to be out. If it opens positive, all right. So I missed out on 20 cents, 25 cents. If this is going up further, it's not going up another 20, 25 cents. It's probably going up the same magnitude as this, at least over the next couple of days. So you're looking at $1.50 or so to the upside. And let's see. Yeah, CZR is down. I guess the earnings weren't good. Down quite a bit after hours. TESO, another one that looked good during the day. As a matter of fact, I wasn't believing my chart because it was up 34 cents during the day while the market's selling off hard. But then by the end of the day, they got tired of it and got out of it. So this is where we got out of it when it came back down through the open. We did OPK, IR, WD. The reason I'm showing these is because a lot of them had some very good potential had they stayed strong, had this market not fallen out of bed. And they still have potential, but the risk-reward factor right now is if this market starts heading down first thing in the morning, some of these stocks that show an indecision up here have just as much possibility of going down as they do up. So why take the risk? Close out the position on a doji. Know exactly what to do tomorrow. If it opens lower, you stay out. If it opens higher, you can always buy right back in again. And what is this? FCN was one that I was real pleased with during the day. It moved up nicely, but by the end of the day, it had come back down through the open, which did two things. Did a shooting star signal, number one. Number two, brought you right back into the trading range. When this gap up move out was telling you we were breaking out of that trading range, but now that's kind of fizzled. All right, there's still some good-looking charts out there. And I show this one because this one still acted well. This was a doji gap up, and it opened up positive today. So this was on my top list of 5 or 6. I just happened to pick out the other ones. And so the rhetorical question is, how do you pick which ones to go after? And you just have to decide which one has the best upside potential as far as a pattern. Sometimes you're going to hit them. I say sometimes. More often than not, we're going to hit some good trades. But occasionally you're going to get the dogs and another trade will act well on the day. So that's exactly what happened with AVG. Some people picked out in the chat room today, NAT, coming out of this double bottom nicely. This one, you can still be positive or be long on this one. And 5 below, at S.FIVE. This one still acted well. Again, that relative strength. There's your kind of doji spinning top, inverted hammer, bullish confirmation, and traded up today. Traded up nicely on a day when the market was getting whacked. So this pattern is giving you more strength, indication than what the market was doing. So obviously, if they were still buying this, not creating any sort of sell signal going into the close, that means something's going on here other than what would be the normal expectation of what a stock should do during a downtrending market. Another one that somebody pointed out on the chat room, PSMI, another nice little rounding chart, rounding bottom with a doji gap up through the T line. This one I wouldn't be afraid to be buying on positive trading tomorrow. Let's see, we did see the, now, let's see. All right, let's take a couple look more at longs, and then we're going to go to the shorts. Zolt held up well. Whoops, held up even better with the bullish engulfing signal breakout the next day. This one, all you can do is stay long. At this point, I would have my sell stop right here at a logical spot that tells me if the price comes down through this level, I don't want to be in there anymore. And it doesn't cost anything to put a stop in, just for safety factors. As we saw today in ESI, which had been acting relatively well, did a doji. Nothing had yet shown us that there was any catastrophic selling coming into it, except today. So if you picked a spot just below the T-line, pre-market, and said, all right, this one shouldn't trade in this direction. It should be opening positive and trading positive. At least now you've protected yourself from being caught in a situation. So you know what would happen after a doji. If they open it lower, they were taking it lower. So you just put a stop in down here somewhere right near the bottoms, because if it headed in that direction, you were probably going to be heading lower. Now, was it going to head? Did you have any idea it was going to head this low? Absolutely not. But it protects you from a situation like that. Let's see. EXK. This one's got the doji after kind of basing, doji gap up, closed right here on the T-line. Makes it very simple. If this market shows some vigor tomorrow and this opens positive, you want to be buying immediately, just using the T-line as your stop. It shouldn't come back down through that level. Some of the mining stocks, PAAS, acted well. There was that kind of bullish engulfing, doji gap up, big reversal. Watch to see what it does once it gets to the 200-day moving average. And what else we got here? KGC. Also closed right on the T-line after some bullish confirmation. What you need to see is a close above the halfway point of this candle. The longer it takes them to close above that level, the higher the probability that the bears are going to get more incentive and knock things back down again. That was KGC and INAP. Another one that's setting up a trade for tomorrow that if we see things open positive, there's that doji sandwich setup. If this opens positive, you want to be buying. Good little breakout situations. All right, so whenever we see that big sell-off, it's obviously time to get out of a position. If we see something that tells us the bulls are taking control and the next day they gap it down below the open, if you had jumped the gun and started buying up here because it looked like it was closing above the T-line, definitely get out on a weaker open below the previous day's open. That's just kind of a basic rule. That should be one of your number one rules. If you see something gapping down below the previous day's open, close out the position because something's not acting right, especially if your stochastics are already starting to roll over. And let's see, CWH, another example that if you're happy, and then the next day they gap it here, down here, just do one thing. Put your order in, hit the sell button as fast as you can, because they're not going to be in an uptrend, gap it down well below the previous day's open, and then bring it right back up. The only way you can stay in it is by the time you've typed in your sell order and getting ready to punch the button, if they're already moving it back up, you stay with it until you see when the selling stops. But to be safe, if it was starting to move up, you still put your sell stop one tick below where it opened, because if it comes back down through there, the bears are in control after gapping it down. All right, so with that same scenario, we're starting to look for things that tell us that things are rolling over and starting to get weak, because we're hoping to get a big move to the downside like this. That's looking for the right patterns, that dumpling top with gap downs. When that gap down starts, that tells you they're not only going bearish, but they're trying to get out of this one in a hurry. So those are the ones that we're looking for to go short. For example, remember our basic rule, there's that left-right combo, huge sell signal right at a resistance level. The bigger the signal, the more compelling your downtrend is going to be. Notice what it did for the last couple of days. Tried to do a hammer, tried to confirm, but could not get up above the halfway point of this candle that told us the bears were still in control. Until that happened, you still have to be suspecting that it's going to be more downside. XTXI. Bearish engulfing signal. Down through what would be considered your trend channel. This one you can be buying with the first target obviously down here at the 50-day moving average. OC, Morningstar signal, gap down. When they gap down, especially through a trend channel, especially through the T-line, there's force to the downside. I wouldn't be surprised if this isn't going all the way down to the 200-day moving average. And Pulte Homes. What was that? Pulte Homes just starting to roll over. Notice that they did kind of a double doji day to the downside. That tells us there's probably going to be more downside. How do you know you can short a stock? Rick, right now, I do a lot of trading through Thinkorswim. Basically, all you have to do is hit the bid side, and then that will bring up that you want to sell the stock, and then hit the button to sell. Sometimes, though, if they've got it in inventory, it sells it immediately. Other times, it may say it's working. So for that 15, 20, 30 seconds that it's working, somebody somewhere has found this as a trade and doing some quick research to see whether they've got that stock available to short it. So even even today, I forget which one it was that I shorted, and I had to wait 45 seconds before I saw that they were done working it and start selling it on the start executing the order. Let's see. ALJ. Bearish engulfing signal, bearish engulfing signal, bearish engulfing signal. Stochastics heading down. This one you short immediately on weakness. Target number 1, target number 2. That's ALJ, OMG. There's your long-legged doji, gap down through the T-line. They're going for the first target, which is your 50-day moving average. Now, if they open this lower, they're going down to the 200. First, they'll fill this gap, obviously, which pulls you down below the 50. And MIG, which was acting very good on the upside, had run into resistance up here at the 200. Now you've got a bearish engulfing. If they bring this back down through the T-line, there's a good possibility they'll bring it back down to the 50. And USG, kind of that kicker type signal from a spinning top, breakdown, bullish Harami was very, would have been very skeptical as whether to stay short on this one if you were short. except you just have to get that last parameter of what would happen, that if it stayed strong, it would definitely have gotten through, or should have gotten through the T-line. The fact that they took it up and then started bringing it back down told you that you could be shorting this again or reshorting it with the anticipation your next target would be somewhere down here near the 200. STRA tells me they're starting the next wave down. Kicker signal, flat. Now that flat has broken down, they're still ready to take it lower. Okay. It took me a while to figure out how to short on toss. I would put in a short position, and it would show minus 100, and then I would try to increase it to minus 200, but I'd hit the button pointing up, and immediately it would flip to a buy. And I think I did it fast enough one time where when I was trying to short something, I bought it. And so I had to close it back out and then re-short it. Yeah, and I usually try to put the order in with a limit, not that I'm intentionally doing the limit, but I would say probably about 80% of the time I'm getting hit right away at the limit. That means it's almost an instantaneous trade. Let's see, what else were we doing? USG, STRA. Oh, Tuesday, Ruby Tuesday, not Ruby Tuesdays, Tuesday morning. Another one that's rolling over nicely that probably is going to come back and test the 200. That one I wouldn't be afraid to be shorting on weakness. Now, this one only trades a couple 100,000 shares a day, so the less they trade, the less likely they have it in their margin account someplace where they can pull it out and use it for your collateral to short and send it on to somebody else. Well, something's wrong here. Why did I have this? Way off on this one. AGO. This is why you need to see the bullish days more decisive than dojis, and they have to get up above the halfway point of this candle to tell you the bears are now in control. A double doji, a failure at the T-line, and start taking it down. That's when you start shorting, because that tells you that this double doji type day is the opposite of a bullish double doji day. That if they aren't doing it with any great conviction in there, that allows the sellers to come back in. DK, S.DK. Those double doji, bearish engulfing, left-right combo. This one you can be shorting on weakness, anticipating a move down here to the 50. And Holly. Holly is another one. Notice what happened to start this downtrend. A huge, long-legged doji, spinning top, then selling. If this one opens lower tomorrow, they're taking it all the way down to the 200-day moving average. And SWFT. Another one that's rolling over, did the double doji and failed at the T-line. That's probably still has a target of at least the 50, if not lower, to fill this gap right here. And OIS, S.OIS, another one, double doji failure. If it opens below the T-line or below the 50, they could be taking it down a lot further. So the ones that I started going after and probably will be recommending tomorrow is OSIS. Notice how it's slowly rolling over. You've got wave 1, wave 2, wave 3 just starting. If it opens weaker tomorrow, they could be on their way down another leg. That would be, let's see, another 15 points, taking you down into the $40 range. So you could be buying the puts on that and just using the T-line as your stop. It shouldn't trade above the T-line. Also, soda was another one that we recommended on the short side, because if it traded lower, we'd be doing a doji sandwich, and it would be showing us on that doji sandwich that they aren't holding the 50 anymore, which means now the next target would be down here in the 200. And HLF, this big bearish belt hold tells you there's a change. Notice the bullish belt hold took you up. The bearish belt hold is going to take you back down. Plus, if you look to see what type of trend we're having in this one, it's a slow downtrend. There's good possibility they could bring this all the way back down and test the lows. What was no, that bearish belt hold is just a strong indication that they have failed.
That Whitem H13 price crossing under a bar moving average.
Right to the 200 and immediately started selling off. Now you have a left-right combo. This one's still in a downtrend. And another one that looks just like it is, I think, who wrote this? NFP. Another big bearish belt hold. Starts the downtrend. This one you can be shorting on weakness tomorrow with the anticipation their first target is at least down to the 50-day moving average. So, some brokers say they don't have stock to short. The problem with shorting stock at a brokerage firm is it adds a couple steps for them. That means they have to go borrow it from another account, which in this day and age should be mostly electronic. But if they don't have the stock, now you can understand if they don't have a stock where the stock only trades a couple 100,000 shares a day. But if there's a stock that's trading 500,000 on up, they should have some stock somewhere. And if you really press them hard enough, you just say, can you go get it off the street somewhere? All the brokerage accounts have cross partnership agreements that if you need to short U.S. Steel and they don't have U.S. Steel to short, they can go across the street to Morgan Stanley or somebody else and say, we need to borrow some of your U.S. Steel stock. We'll pay it back when they cover. So they can go to other brokerage firms and get that stock. They won't do it unless it's 25,000. All right. Yeah, they've gotten pretty snooty. Yeah, you might have the wrong broker, Chuck, but unfortunately that's what everybody thinks about their broker. We all think we got the wrong broker. Or selling the calls, yes. It depends. Now, I will usually buy the puts if I've got a good amount of time before we get to expiration or expiration date. But let's say we're only a week and a half away. Usually the premium on a selling the puts, not buying the puts, or I'm sorry, selling the calls. If things are heading down, you're better off selling the calls because they've still got a premium built into them. So as the stock price goes down, obviously the stock or the option price is diminishing, and the closer you get to expiration date, the any of the added premium in the stock will start diminishing also because of the time decay. Okay, yep, we can do that. That's what we will be doing, is showing when it's time to sell calls versus buying puts. Again, it all comes down to one simple factor, two simple factors. One, which way is the underlying entity moving? And number two, what is the math? The math needs to be worked out to where it's the most effective. Okay. Any questions on candlesticks? Let's see. I'm also supposed to announce that I will be in Las Vegas on March 22nd, 23rd, 24th. So anybody in that area that would like to come join us, at least for cocktails and hors d'oeuvres some afternoon, we'd like gives me a good chance to see the faces behind the names. Let's see, it was MADS failed belt hold. MDAS. Yes. What you don't want to see it close back below the halfway point of this candle. Now, remember, yeah, this is being affected by the market, obviously. And I think AFFY obviously had a nice belt hold. Unfortunately, it's down here right now. So, you're still talking about probabilities. Do you talk on pennants sometimes? Yes. Yeah, what we're trying to do when we're doing options is not necessarily give you any newfangled option strategies. We're just taking the basic option strategies and say, all right, which option strategy is best to apply to this pattern? And that pattern could be a wedge pennant. It could be a fry pan bottom breakout. It could be a J-hook pattern. We want to know what would be the best strategy for those type of patterns based upon what is the magnitude of the potential move, number one, and how much time do we have left? Yes. AFI never did get back up above the T-line, so that's why that T-line rule is very essential. So, all right. With that, Jim, let's go ahead and do the double line. And be ready to do the double line again in 17.2 seconds. Okay, I think we did OC. OC, you want to go short on any weakness tomorrow. RGR. Whoops, what do I need to do here to stop the scrolling? RGR. RGR, I wouldn't be long or short right now unless they gap it up and break it out of this downward trend channel. If they open it lower, they'll probably bring it down to the 50, which would be kind of in line with the with this. So right now, as we can see, we're having a hard time getting through the resistance levels. Stochastics not giving us any indication of how strong that trend's going to be. Valero, another one that you can go short. Anytime there's hanging man, bearish engulfing, big bearish engulfing. Tried to take it back up, double doji, took it down. That shows you the bears are winning. This one you stay short as long as it doesn't come up above the T-line. NKTR, whoops. Humbug. NKTR, there we go. This one had potential, but notice where this one opened today. Way down at the bottom of the previous day's candle. It needed to open up here and start trading higher to be in it. They tried to take it up. So if you were in it, you stayed in it. But as soon as you saw it coming back down, especially back below the halfway point of this candle, it told you that you wanted to be out of this trade. Doesn't mean that the fry pan bottom's over. It just may mean it's going to kind of languish for a while before they can move it back up again. HPQ, another one that has a nice strong signal to it. more than likely you're in a 45 degree, but with the market the way it is, definitely use the halfway point of this candle right now. They could be pulling this back just because of market conditions. So it needs to open positive and trade positive, or at least flat to slightly up to stay in this one. And McDonald's, S.MCD. This one's got a nice scoop pattern. As we can see, they stayed relatively strong. Just be careful what your rate of return is for McDonald's. This is definitely an institutional trader. When I was growing up, we had one of the first McDonald's in Pittsburgh, just down the hill from me. And I could remember for $1, which back then $1 was big bucks, we would run down, we could buy 3 cheeseburgers, a french fries, and a Coke, and still get change back from that $1. Cree, another one that can be shorted with the idea that it's going to come back to the 50, which is right about where the gap up started. And let's see what else we got here. Apple. Apple is very simple. You stay short as long as it doesn't come back up above the T-line. I would still suspect you're going to come back down to the lower end of the trend channel, which puts you down into about the 380 level. Netflix. Same scenario, except now you've got a potential of a doji sandwich. I'd be ready to short this one on a weaker open tomorrow. BlackBerry, same scenario. If this opens weaker, staying below the T-line, you want to be short. SPWR. This one is not showing you any strength. It came back to the T-line. Your stochastics are heading down. If you own this, it's better open positive and trade positive. You definitely want to set the T-line as your stop. If it opens weaker, you want to be out of it immediately. And Priceline. This one, you stay short until you see a buy signal. And, whoops. Let's see. And I'm also supposed to remind people, we will try to do a private training session for late April. We've got a couple people that are showing interest. If you're at all interested in going 2 solid days with learning everything from A to Z on candlesticks, it's hardcore. It's a butt cruncher, brain fryer weekend. But when you come out the other end, you're going to have a whole different perspective on how to be trading. And I won't even do the promotion on it. I'll let I know there's a couple guys in here, a few guys already that have gone through the session. I'll let you private message them if they will allow it, to have them give their honest assessment of whether it was worthwhile for them. Anyways, we try to get 4 people, maybe 5 people in a session. So they're called private training sessions because there's enough people there that if you are kind of in a daze, you still have somebody asking questions that you would probably ask the questions of. You'd probably be asking the same questions. Just you didn't think of it right at that moment. And I found with 4 or 5 people, I'm trying to talk and type at the same time. We're not doing a very good job. This one, probably you're looking at the 200 to be the downward target. So you're probably, but you can be short this one, stay short. If it doesn't hold at the 200, it's heading down to about the $30 area. And AP, FC. We looked at that earlier today. That's got a good looking chart, except we have a shooting star in the overbought area. I would put a sell stop at where it closed yesterday on Friday. If it comes down through there, that tells you they're probably bringing it back to the T-line. AVG was one that acted well. It was one of the ones I was picking because of the doji gap up. It was number 4 or so off the pick list. So that's still, you want to hold on to this one as long as it doesn't create a sell signal. HGT. This one's running into trouble right here at the T-line. So doji gives you a very simple platform. If it opens lower, you close out the position. Now, I have NAT already. Yeah, we did that one earlier. We had that one already star next to it. That's probably going to be recommended tomorrow on a positive trading. And INAP, same scenario. If this opens positive, you probably want to be buying on the doji sandwich setup. NVDQ. Another doji sandwich setup. Make sure your volume is good. I don't see what the volume is on this one. NVDQ. Yep. So be prepared for your doji sandwiches. All right. DDD. DDD had a 3-for-2 split. So it traded lower because I think a 3-for-2 was somewhere around 38.50. So it traded down afterwards, but notice that they were buying during the day after the open. So I'd keep an eye on this one to see if it's not already touched this downward trend channel and now ready to come back up and test the upper part of the trend channel. If you're in it, after the gap down today, they should be taking it higher. I would use today's open as your stop. Ford has been rolling over. This one, for traders, you could be going short. For long-term investors, if it opens weaker tomorrow, you might take some off, which we're looking to do. Maybe take off a quarter or a half of your position with the idea that you might be able to buy it back down here at a lower price. VZ. This one is still a good-looking chart. You stay long as it doesn't show any sell signal. KEYW. That one looks like a shooting star, gap up. So I'd put you stay long, but I'd put a sell stop right here where it opened. If it comes back down through there, the bears are taking control. Las Vegas Sands fizzled. It was trying to do a Morningstar signal, took it up. You've got a booster to the downside. You should have been back out with it closing back below the T-line. Right now, I would probably be going more apt to go short on this if it opens weaker tomorrow. Let's see, we did Apple, Goodyear. This one you can go short. Looking for it to go down to the T-line. Now, after these big down days, unless if we see the pre-market futures kind of moderate, meaning relatively flat or maybe even up 20, you're going to see a lot of dojis set up in some of these big down days. But if the market doesn't pick up steam, you're probably going to see a lot of those dojis after the big down day confirm into a doji sandwich situation, a bearish doji sandwich. RKUS, yeah, held up well, but notice it did not come up with a signal. That's not a signal there, so I'd be a little bit more apprehensive about going after that with any great enthusiasm. GAT, I would say short this if you could, but you can't because it's below $5. If you should not be in this again. Anytime you see them close below the T line, there was that doji sandwich, which told you there was still more downside. And ABMD held up well today. This one you continue to hold as long as it doesn't close below the T line. TD, another one with a booster bearish engulfing. This one you want to be going short on any weakness tomorrow. That was TD, MasterCard. That. .NA. Bearish engulfing, left-right combo, closed right on the T line. If this opens lower, do a put spread. And Bank of America, another one that has a double top, still on its way down. It's looking for something down here. Now this is one, you couldn't even really put the Fibonacci numbers on here because it started another trend. But a possibility they could bring it all the way back down to the 200. And BIOF, just this one's failed. Your dark cloud. So this one was a perfect one that if you had been in it and it opened positive and it started trading up, you put your sell stop right here, one tick below where it opened, because if it came down through there, it's going to do some sort of sell signal. If you miss there, your next stop was right here where it closed, because if it came down through there, it's probably going to create some sort of sell signal. So right now, you should not be in this anymore. Should have been out, probably with it coming back down through the candle that told you they were breaking out through the resistance level. And Goog. This one, left-right combo. Get ready. If this one opens lower, you want to be shorting it. Oops, gotta scroll. Abercrombie Fitch. Stay short. Saw this a few days ago. Somebody pointed this one out. That's a good short. And Coach also stays short. I think this was another one that I had seen. Even though you're in the oversold area, you did a left-right combo right here at the T line. You want to stay short on this one. Let's see. Yeah, AFFY had a drug recall because apparently some people died using that drug, so that's bad news. HHC, nothing here yet, but if it does open lower, you can be shorting it with the first target being the 50 and then seeing if it goes below that level. RPRX, nothing there. I probably wouldn't even go short on this one. You had the gap up. You had the profit taking over, but now you've got some selling. This is not a clean chart. I wouldn't be trading this one way or the other. And Starbucks. No, this isn't Starbucks. This is SBA. This one you can buy on positive trading tomorrow, but because of the shooting star today, you stay away from it if it opens weaker because it's going to come back down and test the T line. UVXY. This is the hardest symbol. This should be a license plate, so they can't pick you up. Nice little breakout. That's not a bad looking chart. Oh, that's okay. The Pro Funds. That one plus TZA, same type of chart. Bought some TZA on the close today. And what was the other one? I know what it is. Oh, FAS. That's it. FAS also left-right combo. So those are the triples. I'd rather play with those just for the leverage of knowing leverage. Since you're anticipating you're heading down, those should be heading up. You might as well get as much leverage as possible. This one is still, if you're short, you stay short. Notice how they slowly roll it over. Now you're probably going to have some more panic selling, especially if this market continues to sell off. TVIX, another one that's broke out nicely today. Left-right combo. This one you can be buying on positive trading tomorrow. Just want to see this get up, say positive trading. This is one of the short funds. Velocity. Okay, yeah, short term. This one you can buy on positive trading anyways. Joseph H. Banks. This one you probably want to be going short on weakness. Be able to get back up above the T line. Coles. This one you can be shorting. Notice how they took the shooting star right smack dab to the 50. They're going to be taking this down at least to the up to the 200. They're going to be taking this with a left-right combo, confirmed, below the T-line. First target is your 50. They could be taking it all the way back down to the recent lows. And RUT, let's see if I can get it over here. This would be the Russell 2000. Try it here with IWM. The Russell 2000, just like the other indexes, strong to the downside. BBBY, left-right combo to the downside. FTNT, another dark cloud. If this one trades back below the T-line, you want to be shorting it. Again, I wouldn't want to be long. That one, to stay in it, you'd have to have a strong open with strong follow through. RRD, another one, needs to, if it opens lower, you want to be out of it immediately. It needs to open positive and trade positive to stay in it. And RNDY, another one that can be shorted on any type of weakness. SRPT. This one has the pennant formation setting up. So if this one breaks out to the upside, you want to be buying it. Anytime you see this type of pennant, if they break it out one way or the other, that tells you this pennant, which is pent up, pent up investor sentiment. When they break it out, they'll break it out for a big move because everybody's happy that they've finally got it out of that range. MGM. What's happening here? S.MGM. There we go. This one is probably coming down to the 200. Left-right combo today after failing at the T-line. Panel. Panel was one of the ones that, broke down that kicker signal to the downside. This one you can be shorting on any weakness tomorrow. Chesapeake, same scenario. You can be shorting this one on any weakness. Just watch what it does once it gets to the 200. Appy, if it opens positive, that tells you today's profit taking is over. The bulls are still there. They'll take it right back up again. Anytime you see that big shadow of the upside and your stochastics at the low end of the trading range, watch for them to open it right back up into that shadow and continue to take it up. If that profit taking was on that day of the shadow, the profit taking would be over. Big hammer signal, except if I was going to buy this, I'd put a buy stop at 1303, knowing that it got out through the upside. And that was AHS, SNV. This one, you don't want to be in it, obviously. You can't short it. So All you can do is wait until you see a bottom on this one. AGN. Another one that is very doubtful. Do you know which way this one's going to go? I don't either, so why be in it? Anytime you see a chart where you can't decipher which way they're taking it, they took it down, they took it up, they took it down, get out of it. You can always short it once it's broken some level, or short it if it's broken a level. You can always buy it if it's broken another level. But right now, wouldn't have any idea which way they're taking that one, so why be in something? The whole point of using candlesticks or any trading method is to provide an added advantage to knowing which direction the trend can possibly go. And if you're looking at a chart where you have no idea which way the trend's going, go someplace else until the trend does develop in it. Same scenario on QIHU. Wouldn't be able to tell you which way this one's going, so I'd say don't be in it, go someplace else. And I say that with the confidence that if you're in a chart that you don't know which way it's going, get out of it, because there's tons of other charts that you're going to be able to scan for and be able to assess by seeing whether it's a good short or a good long and not have to guess which way it's going to go. But you're putting your money back someplace where it's obvious it's going to move one way or the other. MTW, this one can be shorted on weakness tomorrow. Velt. Velt, you can't short it, but you definitely don't want to be in this one, not until they can close it above the T-line. Let's see, AMCC. AMCC, yes, you can be shorting this one. This one was a good long just a couple of days ago, but then as you see, it failed. So some people raise the question, well, what good are the candlestick signals? The candlestick signals tell you when it's time to buy and when it's time to sell. They're not telling you that they are going to be something that's going to have a good result. All they're telling you is that they've got the probabilities of having a good result. But when they show you that there's going to be a bad result in that stock, get right back out of it. I would guess somewhere between 25 to 35% of the time, I am getting in and out of positions more than once before it starts moving the way it should. So there's a lot of times where I get in, get right back out, get in, get right back out, get back in, because each time I've gotten in, it was based on a candlestick buy signal. Each time I've gotten out, it was based on that buy signal wasn't working. But the reason we were buying in the first place was because that buy signal was occurring in the right place of a trend in the oversold area. So it's still in the oversold area doing another buy signal. So that tells you that buyers are there. It's just when the sellers get out of the way that it becomes a good, strong trade. What is this one? CDNX. This one you can stay short, looking for it to come all the way down to the at least the 200. And Nuance. Stay short if you're short. Or if you're looking to go long, you don't go long until you see a close above the T-line after a buy signal. And AXL was one that, no, AXL was the one that I was looking at. Yeah, this one you can be going short with the anticipation it's coming back down to the 50-day moving average. Let's see, okay, Bill, this is the 200. This is the 50, this is the 20. They're all simple moving averages. That's what all the major money managers around the world use. We just have the benefit of seeing what's going on exactly at those levels. This is your important one, the 8 exponential moving average, which is our T-line. And that's a very good indicator to tell you that a trend's in progress until you see a sell signal and a close back below that T-line. Sam, yes, I would think that Apple could get down to that level. But if you drew a line right down through here, yeah, depending on how long it takes to get there, you could be down in that range. slow stochastic is 1233. Yeah, most of them will use a 1455 or maybe a 1433. How does one private message? William, if you click on the name over on the left-hand column where you see all the names, if you right-click, it'll pull up a little box that says send private message. And that's where you can send a private message. Where in April? Probably here in the Houston area. We're going to try to figure out a spot where at least we're looking over some water. Lewis, I don't know. That's a question you have to ask everybody out here. I don't use the weekly or the monthly other than when I'm trading, putting people in long-term positions. I would tell you, except I don't want to infringe on their privacy, so if you have done the weekend course, you can let yourself be known out here, or you can email me, private message me, and say, yeah, I'll answer somebody's questions, and then I'll get you in touch with them. Let's see. Yeah, I have found that if you put a sell signal in, you can hit sell market, but I would say about 80% of the time, if I put it in with their automatic sell limit, that I will get that execution at that sell limit. Today, I did a couple trades where I was coming out of maybe 4,000 shares or something, and it would do the whole trade except 400 shares, which meant I ate up all the bid at that level. And I'll let it sit there for a couple minutes. If they don't do it, then I'll come back and I'll say cancel and reorder or redo the trade at market, because by that time I don't care. I just want to get done with the trade. Okay, now, whoops, I scrolled way up too far. All right. Okay, I guess, let's see. Zynga back down below the T-line. Obviously, if you're in it, it has to open positive. Not below the T-line, I'm sorry, below the 200. It has to open positive. If it opens negative, they're going to bring it back down to the T-line and do the T-line crunch. So you're going to be stuck in it for a few days before you get any movement out of it. So I would definitely, if it opens weaker, I'd definitely close it out for two reasons. Because the market in general looks like it's selling off. If this starts selling off, it's going to take a few days for it to get started again. Okay. Chuck, if everything is looking like it's nosediving, see what the market does tomorrow. Remember, it's always easier to ride with the wave. Watch out for our DN. It gapped up, did kind of a shooting star. If it opens weaker, you want to take profits. EXK has to open positive. If it opens weaker, it didn't get through the T line. IACI for a short. Yes. This one, as you can see, this one's been in a downtrend. I would suspect that you could draw your trend line down through the bottoms. It could be heading down into about the $35 range. SVM also needs to close up above or get up above the T line tomorrow to be in it. KORS, this one you could be shorting, anticipating it's heading down to the 50. You've had a kind of a big Morningstar abandoned baby type signal here. That's a good, strong selling signal. No, when they split DDP, they
13 price crossing
changed
under
everything
a bar,
to where it
moving average.
now becomes that number, and everything changes with it. The moving averages and the T line. That's what the stops are for, is to get you out of the positions that when things aren't moving in the right direction. So that's why if I'm sitting here just kind of diddling my thumbs, and I've got a position on, trying to think of something. Let's say I shorted Holly tomorrow and it started down. I got to say, all right, where would be a spot that tell me I'm in trouble? So if I shorted here and saw it move down here, I'd put a buy stop back up here just above the 50, because it should be going this way. It shouldn't be going back up that way. Will I get hit? Probably not if everything's moving like it should. But what I don't want to have happen is shorting it, and then all of a sudden something happens, the market, something happens, and they start skyrocketing the stock. I want to be out at a spot that told me I shouldn't be in it anymore. Looks like a breakout today. A huge call option activity today. This is a gaming-related stock I was posting about. You can do the trade as a buy and hold. Bill, what was that one? Oh, Zynga. Well, Zynga, whoops. Yeah, if it opens positive, yes, I would agree with you. Kind of coming out of a fry pan bottom, hitting the 200, pulling back, trying to get through the 200. It has to get through the 200 before it can really get moving. Okay, well, let's call it a night. Let's see. Are you going through these stocks? As you're going through these stocks, what scans are you using for each group? I take it you build this, you start with from a set of scans. Can you highlight the scan search you're using to go through, like the next symbol, like the next symbols are from the, all my scans are basically done on a simple basis. Because I can recognize which signals and which patterns are strong, I don't have to have those as specific scans. So I can do right now I just use my trading universe, which is stocks greater than 5 and trading more than an average of 200,000 shares a day. That's the trading universe of 2,700 stocks. All I do is sort them by which ones had the biggest % price move today. Now, that's how I find my buys. On the other hand, I go to the end of the scale and say, all right, which stocks had the biggest % price move to the downside today? And I can look at those. Now, if I want to get a little bit more specific, I can do a scan that has stocks greater than 5, more than 200,000 shares a day, with stochastics below 20, means they're in the oversold area, and had the biggest % price move to the upside. So that gives me a very quick scan to show me which stocks were in the oversold area that may have produced a big buy signal today. Or conversely, on the short side, which stocks were trading with stochastics above 80 and had the biggest % down move today, which that's usually going to give me a good, strong sell signal. So we would do a session on scanning here pretty soon. We're trying to reschedule the option training session on an open date. Eric, you're having trouble with your button there. Other than the kicker, what is the most bullish and most bearish? They are not necessarily any one greater than the other. It all depends on what the market conditions are. Sometimes when the market turns, the hammer signals are the predominant ones that are showing a reversal. 2 months later, there might be a market reversal, and it's the dojis at the bottom. And the next month, it could be the bullish harami. So they aren't. There's none stronger than the others. It's just that they all work. You just have to see which ones are working effectively at a specific time in the market. Okay. With that, let's go ahead and call it a night. We'll see everybody in the chat room tomorrow.